So as I stated in the email, the purpose of this webinar will be for me to get caught up and take a closer look at what went down over the last week and formulate some outlooks just like we would usually do in our afternoon sessions. Just kind of general outlooks, setups, survey the landscape going into this upcoming week, and then we will just go over some bearish, bullish, neutral setup outlooks as well, over under setups. I'm not going to do support and resistances. I'm just going to do that on my own. That's rather tedious. And then at the end, any questions you have, any stocks you guys want me to go over, we will do that as well. So, firstly, looking at Tesla. Tesla came below 200 this week and experienced a pretty good sell-off, cracked into that 189 to 174 or 175 range, actually came pretty much right to the midpoint of it, 184, smack dab in the middle on Tuesday, but it never closed below 193, which you guys should be aware was our key support before this move started. Why? Because 193 was the earnings day close, the day going into the earnings report, I should say. So, it's bearish while it's below 200, but in order to really get another leg to the downside going, it needs a close below 193. So, we've seen bearish intraday pressure show up, and I expect that to remain the case as long as Tesla is staying below 200. However, it's worth noting that so far Tesla has avoided closing below the key 193 support level. While below 200, though, the potential is for more tests on 193 with a close below that level, setting up a test of the recent 184 low and 175 being in play below that. If Tesla can regain 200, that would set up stability and bounce potential where, let's look at some resistance. Friday's high 202.30. Last Friday's close 204. This past week's high was 208.50. So if you can get stability above 200, then it looks like 203 to 205 and 208 to 210 would be upside targets. Overall, Tesla needs to regain 210 in order to set up a potential bottom where 220s would then come back into play. The one thing I do want to point out about Tesla is this move lower from this high compared to this move lower back in October, November from that high. And what I want to point out, number one, is the obvious in terms of percentages. Okay, you went from a high of 194.20 just about to a low on November 26th of 116.10, which translated to a drop of 40%. And that took you from October 1st until November 26th, so just about 60 days. Now, this most recent drop, you've gone from a high on February 26th of 265 to a low this past week of 184, which translates to a 30% drop. And again, that started February 26th was when you put in that all-time high that you pulled back off of, much like on October 1st. And you're coming up on the 60-day mark this week in terms of this pullback. So you're approaching the time similarity to the last major pullback, but you're only at 30% compared to 40%. Secondly, what I want to point out is where the bulk of these losses came from. In this pullback from October to November, it was 40%, but a good chunk of that was on this gap down in early November. On that day, previously you were at 180, and then on that day you opened below 160. You were talking about a drop of 14-15% on that one day alone. So the total drop was 40%, and you had one day where you dropped, 14%. So that's over 30% of the 60-day pullback could somewhat be attributed just to that one day total. This pullback here, you've had some ugly days, such as here in early April, and then of course this past week, although you finished off the low, and then as well in mid to late March. You've had some ugly days, but you haven't had any day where you've come anywhere close to this early November 14-15% one-day drop. So my point is that this pullback seems to be more controlled, for lack of a better word, than the previous pullback. It doesn't seem to be ripe with as much panic. And for me, I think that's bullish. I just see a stock that's in a long-term uptrend, and 30% drop, that's a big drop, but doesn't seem like people are panicking. And, once the uptrend resumes, it should be able to do so in steady fashion. The other side of that, however, is that, hey, this thing's dropped 30%, and there hasn't even been real panic yet. So imagine what might happen to the stock price if real panic starts to come into the price action. Maybe now you have a much harder drop down towards 160 or so. So just kind of your perspective. But there are differences that I wanted to note between this pullback of the last 2 months and the other major pullback from October to December. So we'll see how that plays out. Overall, though, just going to be focused on 200 from here. Oh darn, I'm sorry guys. I forgot to hit broadcast, didn't I? I figured since I was showing my screen. That's annoying. Sorry about that. I figured since I was showing you my screen, everything was moving. So you guys didn't see anything moving, right? You just saw the chart screen standing still. Just so I know where I need to go back to. Oh, so you saw the cursor moving, you just didn't hear anything? Okay, well the commentary was recorded, so that's annoying, so sorry about that. I'll recap what I said. Really sorry about that. But basically what I said on Tesla, and again, everything was recorded, so the commentary will be here when I upload it this evening. So I'm not going to do a full 180 and re-explain everything. But basically what I said is that as long as Tesla's below 200, it can go lower. That's just the easy level to focus on, is the $200 level. If you're staying below 200, then this low from this past week is in play. However, the one thing that I noted is that while you have pressured 193, which was the earnings day close support from late February, you haven't yet registered a close below 193. So it's a close below 193 that I believe sets up a test of this 184 low. Okay, and if that happens, you know, you can continue this downtrend. On the upside, you know, I really feel that it's as simple as getting stability above 200. If you get stability above 200, then that's where I think you start to see Tesla bounce towards 203 to 205. I'm pasting what I said or what I wrote in the recap just so you can also see. And then what I also pointed out, since you guys said you saw the cursor, so when I highlighted these two areas right here, what I was pointing out is that this pullback from the October 1st all-time high to late November lasted about 60 days and took the stock down about 40%. And a lot of that, well, not a majority of it, but 30% of that move lower was attributed to this day right here, when in early November Tesla gapped down. You can see the gap down from here to here. Tesla gapped down 10% and then fell another 5%. It was down about 15% on that day alone. And this pullback going on right now in Tesla off of the recent all-time high is again coming up on day 60. You put in the all-time high on February 26th, so you're approaching your 60th day on this pullback, but you've only dropped 30%, which is a large number, but it's still 10% less than this pullback. And we know that this 40% pullback ultimately ended up being a great buying opportunity. So this could be similar here. It might be a great buying opportunity. And in this pullback off of the March all-time high, you haven't had a big down day like you did in November with this day here. You haven't had any one day where Tesla's dropped, you know, 10, 15% in a day. So it's been more of a controlled pullback. And from my perspective, that's bullish. But I made the point that somebody else might say, no, that's even more bearish, because here you are down 30% and you haven't even yet seen major panics come into the stock's price action, where if that panic does start to show up, now maybe you're coming all the way down back towards 160 or so. So, you know, but easy focus is just on 200 from here with Tesla, and that's the level I'm definitely going to be watching to dictate long short. Again, sorry about that. All right, moving on to Netflix. So Netflix finally got the bounce, or somewhat of a bounce. It finally got above a lot of its previous day's highs. Really nice day on Friday, 5% gain. Nice sharp move off of the 312 low from this week, where, you know, this is Netflix's best chance to have a bottom in place. It needs to hold on to Friday's gain in order to have that bottom in place. No reason to go back below, you know, the 340, 335 area if Netflix has a bottom. And the one thing, though, is earnings are on Monday. So expect a gap one way or the other on Tuesday. And what I'm about to say is really just going to be based more off of the earnings reaction as opposed to, day to day, because if I was talking day to day, I'd say resistance at 350, support at 335, but I would expect the earnings price reaction to take the stock either well above those prices or well below them. So overall, what I'm going to say relative to earnings is if earnings don't get the stock back above 360 to 370, then this is still a short. If earnings don't get Netflix back above 360 to 370, then it is still a net short. Stability above 370 is required to confirm a bottom and reestablish an uptrend back into the 400s. The other, that's to the upside. You need to get back above 370. If you're, anything below 340 to 350 is very bearish on Netflix. And targets a test of support between 320 and the recent year-to-date low at 312. Now, if Netflix comes down to 320-ish, but it's able to hold, and it can get back above 335, then that could set up a successful double bottom or a successful hold of support, however you want to classify it. If Netflix comes back down to the 320 area but is able to hold and then regain 335, sorry, then that sets up a successful hold of newly established support and targets 350 to 370. And then obviously anything below this recent low is bearish and would have you looking for 282, the October low. That's the one that kind of sticks out to me here on the chart. Below the October low, and you would start looking for the August lows, which would really have Netflix getting ugly and approaching a 50% pullback off of its high, kind of cut in half this kind of congestion area around here. So, we'll see if that happens. This is a stock I haven't traded very much recently. I've been more in tune with the price action elsewhere, but looking for earnings to kind of give me an opportunity to clarify the next move. I missed this move down, obviously. You guys have been watching. You didn't see me trading it much at all. So I completely missed this move down, didn't participate. But now with earnings, that'll be a catalyst where now I have a setup here where once I see that earnings reaction, I'll have another chance to participate where after earnings, I'll feel that that's a catalyst that will get fundamentally priced into the stock. And if it's going higher and above 370, then I can start going long. And if it's staying below 370, staying under pressure, certainly if it's anywhere down below 320 or the recent 312 low, then I know it's a clean short and I can look for that 282 test. Above 282, key support, though, will be psychologically at 300. Yeah, we have a lot of primaries coming up, as Coconut posted in chat. But Netflix is the one on Monday, so have to be extra sensitive to that. Now, another primary that has earnings coming up this week, moving on to Amazon. Amazon has earnings on the 24th after the close, so what, Thursday? So that means Friday will be the earnings reaction day for Amazon. You want to be aware of that. Amazon just outright still looks bearish to me. And one main difference between Amazon and Netflix. Look at Netflix's bounce. You're up 5%. You have a long wick on the 15th, Tuesday. Amazon, same thing. You bounced nicely. You went from 305 to 325 for a bounce of 6.5%. Big wick on Tuesday. But can anybody point out a difference to me between Amazon and Netflix? Just in the daily charts with Friday's candle. Any observations somebody might have before I make mine? Observations going once, going twice. So the main difference to me is that Netflix on Friday cleared its previous 4 days highs. All right. High volume as well. Highest volume in 5 sessions for Netflix on Friday. Amazon is inside of Thursday's range, and it doesn't have great extension above Tuesday's close. You know, Tuesday had the big wick. Tuesday, Amazon closed at 316 and ended the week, you know, around 325 for a nice 2.8% gain. However, Netflix, Tuesday's big wick, it closed at 326 and ended the week at 346 just about. You're talking about a gain of 6% versus that Tuesday bottom. Both of these stocks bottomed on Tuesday. In fact, what it looks like is every stock bottomed on Tuesday. So, you know, that's just something I noticed, that Amazon coming off the bottom is much weaker than Netflix coming off the bottom. So, came off of its Tuesday bottom, along with other primary tech names, but hasn't yet experienced the follow-through bounce that showed up in a Netflix, for instance. Still looks like a short setup to me. Verse 325 to 332 resistance, 332 being picked out because that was the high from April 9th, about a week and a half ago. And what would confirm that is stability below 320. If Amazon is able to hold 320, then it can set up tests of the aforementioned resistance with a 332 breakout targeting 337 to 345. Why 337? Seems kind of like a random number. Well, really it's not. 337, you may recall, was the low from February 5th. It was Amazon's 40-day low that it bounced off of and got back up to 380. So now 337, I would expect it to be resistance moving forward. And that's pretty simple on Amazon. You know, you stay below 320, it confirms that short setup, and targets the Tuesday close of 316. Let's call it 316 to 315. With 309 to 305 in play below that. Amazon still, to me, looks destined for a 300 magnet while below resistance. And then, again, note that earnings are on 4/24 after the close, and I believe that is Thursday. All right, now moving on to a stock that will be in primary focus off the bat right away tomorrow, Monday, because its earnings report is now behind it, and that is Google. We don't have to worry about earnings-related premium anymore. So Amazon, Netflix, Apple are all going to have earnings-related premium at early part of the week. This week, that will, make it somewhat harder to trade like I usually would, but Google had that report last week, so the premium has come and gone, and it's below 550. And I'll read, when I left, Google was going into that report, and I will just repeat what I had said for my outlook into that, just to kind of refresh my own memory and refresh you guys and kind of look and see, all right, well, where are we at? So Google reported earnings on Wednesday. I said, didn't look like there would be major MOMO into the earnings report, but there's potential for downside if Google breaks below 530. I'm not interested in Google's earnings reaction unless it takes the stock either above 570 or below 530, as that's what's needed to trigger a directional move towards either 600 or towards 500. If Google is in its range post earnings, then it is just over under 550. Google has remained a viable go-to for intraday leadership over the last few sessions, and I expect that to continue. So Google did indeed stay in its range exactly. Going into this report, we had this range kind of get established in the week leading up to it between 568 on the high and 530 on the low. You can see the day going into the report, it got up to 564. The day prior, it got down to 530. All right, so it respected that range exactly. And then the report itself, the reaction, took the stock back below 550. So Google is net bearish while below 550, especially now that earnings have come and gone. And, the setup is to the downside while below 550. Above 550 targets a test of key resistance between 565 and 570 with a breakout there, looking for 585 to 600. Above 550, but failing to take out 565 to 570, sets up a lower high and net bearish outlook overall. While below 550, I'm looking for tests on 540 to set up a test of key support between 535 and 530 with a breakdown at 530 targeting a $500 magnet, but you will have some levels of support. You've got here, here, and I guess that one is pretty much at 500. So the December lows and the late November lows, those price levels are 525 and 510. You know, I don't think it's a good sign for tech that Google had its earnings report and couldn't bust out to the upside, but, you know, it's still above 530. $545 is an over-under in between 540 and 550. Okay, moving on to look at Priceline. Priceline is kind of falling into a sloppy channel where we got the low end of the floor. Oh, like that. We got the low end of the floor down here, you know, 540 to 550, and top end of the floor looks to be 1225 to 1240 for now. And something's got to give, but the easy setup is just focused on 1200. It's just kind of been in a range for the last 3 weeks. It's been range bound with directional downside overall for the last few weeks, and the focus now is once again on over under 1200 action. The top end of, or the recent top end of the range, I should say, the recent top end of the range is 1225 to 1235. That was, is that right? Yeah, 1235 was your high from April 9th. So if you can get above that, that would then target a test of 1276, 1270 to 1280, the April 2nd high. And the recent bottom end of the range is, about 1150 to 1140. Really, I'd say 1155 to 1140. With 1100 in play below that. Holding 1200 sets up a test of the aforementioned resistance levels, and holding below 1200 sets up a test of support levels. It's really that simple. Over under 1200, where the over is going to be looking for moves down here, and did I say the over or the under? Well, over under 1200, where the under 1200 is looking for movement back down here, just towards the recent lows, and the over would then be looking for movement up here, as that was your recent high, and then if you can get above that, you would challenge this higher high area just south of 1300 around 1275. Priceline earnings aren't for another 2 weeks or so, so you don't have to worry about them this week just yet, but you should see implied volatility higher than it's been recently due to that earnings premium starting to get factored in. Okay, looking at Apple and how typical of Apple to come right back to the 525 area. Apple does have earnings this week on Wednesday, April 23rd, after hours, so Thursday will be the reaction day for Apple. And just once again, the focus is back on 525. Not a very exciting trade. Not going to look at Apple until the earnings come and go, because it's now for the second or third time showed me that even when it came below 525, it couldn't sustain. However, it did get down to 510, which was a target that I had stated before I left. Of course, it waited to do that without me. But, it bounced back, so it didn't show good commitment to the downside. Apple put in the Tuesday low like all the others. And what the earnings action is about is, does the stock get above 550 off of earnings, or set up to test 550, or does it stay below the 525 to 530 area, where post earnings 500 to 490 would be the target. So more than any other primary, looking at earnings to determine the next directional move, if any. It's very possible that earnings come out and this thing just still stays between 520 and 550. Apple needs a breakout above 550, or at least the appearance of one to be forthcoming, perhaps in the form of 535 to 540 resistance tests. In order to trigger upside momentum. To the downside, the stock needs to stay below the 520 to 530 area. Anything below 530 is setting Apple up to trade lower, but below 520 is when there was some actual downside volatility. Referencing Tuesday's price action, it stayed below 520, ended up hitting 511s. in between 520 and 540, and it's just kind of wait and see on Apple. All right, lastly now, looking at the S&P 500. So the S&P made up a good chunk of these losses. The one problem I have, though, is that it took the S&P, 4 days to make up 2 days worth of losses. And that's different than previous moves lower. For instance, if you look at this action here to the downside, and you look at this action here to the downside back in early December, or you look at this here in early November, or you look at this here in September, October, and you just kind of count the days, you'll see that the S&P has been pretty good about making up losses quickly. For instance, starting most recently in January, the S&P fell from 1840 to 1740. That took a period of 1, 2, 3, 4, 5, 6, 7, 8 days, okay, to go from 1840 to 1740. And then if you just count the bounce days and you get to the 8th day, you'll see 1, 2, 3, 4, 5, 6, 7, 8. By the 8th day on the bounce, the S&P was back at 1830, so only 10 points removed. On the 9th day, it made up the total loss completely, right? So 8 days to go down, 9 days to go up. That's pretty good. And you look in December, the S&P fell from 1812 down to 1770 in a period of 1, 2, 3, 4, 5 days. And you look then the 5 days later, the S&P went from 1770 on 1, 2, 3 days. It was back to 1812, the 5th day making a new high. So 5 days to go down, 3 days to recover all of those losses. You look in early November, it took 1 day down, big down day, went from 1775 down to 1740s, recovered in 1 day from 1740s back up to 1770s. So made up all the losses in 1 day. And in September, you fell from a 1730 high to a 1646 low over the course of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days. You count 15 days further, you'll see that you rose from that low 1, 2, 3, 4, 5, 6, 7 days. You essentially made up 15 days worth of losses in 7 days. And if you count 15 days later, you'll see the S&P was much higher beyond those levels. So bottom line is, if you just count the days and compare the figures here between right here, 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 and here, that's 4 times you've had that. And then you compare this price action here most recently, it's taken longer for the S&P to recover. And you could even say that, hey, this move really started from up here, from 1900, and you're still not yet back up there. So bottom line, the velocity down was quicker than the velocity up, and that is a difference in the price action. So while the S&P has regained 1850, which is good, and negated the immediate term pressure, if you examine a little further out the last few months, you can see definitive cracks potentially showing up in this market. So that is my main point here, that the S&P 500 has regained 1850, which alleviates the immediate term downside pressure. However, when comparing this most recent pullback to pullbacks of the last few months, it does appear to have greater potential for further downside than previous pullbacks did. The key now is continuing to hold 1850 and taking out this pivot high of 1772.50. That was the FOMC high. You know, above, oh, I said 17, I meant 18, sorry. 1872.50. You know, above 1875 and 1900s come back into play. While below 1870, the risk is for a lower high or, yeah, just lower high and move back below 1850. If below 1850, then the focus then shifts to 1840 to I'm going to say 1835 to 1830 support, and then the most recent low of 1814. Key support is now that 1814 level. And that is that on the S&P. All right, so the next thing I'm going to do is I'm going to ask you guys if you have any questions on these primaries before then just looking at immediate term, bearish, bullish, or neutral as far as the daily charts. So are there any questions on the outlooks I just explained on Tesla, Netflix, Amazon, Google, Priceline, Apple, or the S&P? QQQ. I'll start this off. I'll start off the bearish, bullish, neutral stuff with QQQ if there's no other questions. So Coco asking about QQQ. So that's a good place to start for a bullish, bearish, neutral setup. Looking at this, QQQ looks neutral now, having gotten a good bounce from 84 back up to 86. So QQQ to me will enter Monday's trading neutral. But if you come back below Friday's low, then that kind of re-triggers the bearish trade. Friday's low was 85.63, so I'm going to say that a close below 85.60 is bearish. As for a bullish close, I mean, you're doing a good job bouncing. You finished kind of far off of Friday's high, though. Not too far, but still over 0.5% it seems. So I would say that QQQ needs a close above 87. It needs to show some extension. Otherwise, it's just remaining neutral. As for this QQQ overall, you know, you're in a downtrend, and anything below 88 leaves a lower high intact on QQQ and keeps the downtrend in place. So, still a lot of work to do here for QQQ. The reason I don't cover QQQ in depth like I do the S&P 500 is because I just feel it would be redundant, since all of the tech stocks I'm quoting are the major tech players, or 5 of the top 10 major tech players. So everything I'm saying about a Google or an Amazon could basically be translated to QQQ, because as Google's moving lower, QQQ's likely moving lower. As Google's moving higher, QQQ's likely moving higher. But so again, I've got a neutral entrance to Monday's trading, a close above 87 as bullish, a close below 85.60 as bearish. Looking at Apple, Apple will be neutral. Apple needs a close above this recent high at 532.25 was the high. I want to get some extension above that, so I'm going to say 533.25. $1 above that level would be bullish. And as for a close on the low, its lowest daily close recently was 519. So it needs to get some extension below 519. So I would say that Apple needs to close below 518 in order to register a bearish close. Again, it will be entering Monday's trading neutral. Looking at Priceline, Priceline looks neutral to me as well. Priceline needs to get a higher high, so Priceline needs to close above 1235 in order to be bullish. I'll say 1236. As for a bearish close, it needs to give up this gain from Thursday, so below 1174 would be bearish. Looking at Google, I would say Google enters Monday's trading bearish. Stock dropped 3%, hard move lower. It had earnings, so maybe you were expecting bigger than a 3% move, but if you toss that aside, it's still down 3%, closed below 550, closed below 545. So I'm going to say that Google enters the day bearish, and as long as it closes below 550, it stays that way. And I'll even say 549, just to get $1 below that 550 mark, show some confirmation there. As for a bullish close, it needs to take out that 564 level from the day of its earnings report, get some extension. So it needs to close above 565 in order to register a bullish close. Google does. Looking at Amazon, Amazon I would say is neutral right here. My gut says it's bearish. I mean, you're up 4 days in a row. You're still not above resistance, or key resistance anyway. But, looking at it objectively, I'd say it's neutral right now. And it needs to close back below that Tuesday spike close of 316. I refer to a spike close as a close where the price finishes well off of a low. It hit a low of 305, closed 316, so it spiked off of 305. So below 316 would be a bearish close. As far as a bullish close, it needs a higher high on the trend overall, so it needs to get above 332, 333. So officially saying that Amazon is neutral, needs to close above 333 in order to be bullish, and a close above below 316 in order to be bearish. Looking at Netflix. Netflix, nice day on Friday, but I can't really say that it registered a bullish close because it's still below a lot of resistance levels. So Netflix is neutral to me here, where it needs to close above this high from April 10th, 357.50, so I'm going to say 358.50 as far as bearish. No reason it should give up the gain. So if it goes below 337, that was Friday's opening price, then to me that would be a bearish close. Looking at Tesla, Tesla's below 200, but it didn't really keep going lower aside from Tuesday's shakeout. So, to me, Tesla's neutral and needs to get below 195 in order to get that downside going again. As for the upside, it needs to get above this high from before it went below 200, or closed below 200 rather, and that is 208.44. So I'm just going to say 210. That's just simple. And that is that. Simple over-under setups, guys, levels that I'll be focused on when I'm plotting my support and resistance. Tesla closed 198, so I'm going to be focused over under 200. Netflix closed 345, so I'll be focused on over under 345. But again, Netflix has earnings on Monday after hours, so likely just waiting for that report to bring me some clarity. Amazon closed 324, so I'll be going with an over under 325 setup. Google closed 543, so I'll be going with an over under 545 setup. Priceline closed 1208, I'll be going with an over under 1210 setup. Apple closed 524s, I'll be going with an over under 525 setup. QQQ closed 8620s, I'll be going with an over under 8625 setup. And that wraps it up on my end. Again, I'll be doing support and resistances on my own. I'll have prep posted by this time tomorrow at the latest. So any questions about anything, any stocks I didn't cover, anything that might have happened while I was gone, anything at all? Any questions, guys? Yeah, I saw that Google Class C shares have options. I have seen those. I have not been trading them. I've been trading the Class A, and I'll probably stick with that. But yes, I am aware that there's options on both. As for which one you want to trade, I would just, pick one and go with it, see if you like the way the stock moves. I mean, at the end of the day, that's what option prices come down to, is if the stock moves nicely, then the options are probably going to move nicely as well. So between the Class A or Class B, or is it Class C? I don't even know what classes it is, really. Whichever one you like as far as the way the stock's moving, then that's the option I would go with. Any other questions, guys? Yeah, it seemed like last week was interesting. It seemed like there was a lot of intraday volatility, but at the end of it all, it seems like there was a lot of unchanged movement. I mean, I left on Monday. Tesla closed that day 198, and at the end of the week it closed 198. Now in between it did a lot of shit. Netflix with some good movement closed 331, end of the week closed 345. Amazon didn't have a ton of net movement though. It was around 320, going down below 320 when I left, end of the week 325. Again, a lot of in-between action. Google, same thing. Priceline had some good net change. I remember before I left I was saying Priceline may be going down towards 1100. Ended up being dead wrong about that. Got back up towards 1200, so good net movement there. And then, of course, Apple didn't have much net movement at all. So a lot of people got screwed. Yeah, that's what I'm always saying, man. It's like everybody sees the volatility and their dicks get hard, but then they get fucked up and they're crying about it because they think just because there's volatility they're going to make money. It's like, no, bro, you need to still execute the right way. And that actually brings me to just a quick quote I was reading. I was reading a sports article this morning on the NBA playoffs, and it struck a chord with me when it comes to trading. One of the coaches was talking about how during the playoffs, you don't change anything. You stick with what worked during the regular season. And, he feels that in the past maybe he's made some mistakes by trying to quote-unquote reinvent the wheel, and that in the playoffs, you just, whatever worked during the regular season, you just try and do it a little bit better, but you don't change the foundation. You don't bring in new plays. You don't change the execution. You just try and execute better. And to me, it's the same with trading. Whenever there's volatility, whenever there's earnings, I think that there's always a sense that, okay, maybe we need to do something different. But you don't need to do anything different. You need to do what you would usually do, have the same approach, but you just need to be on your game even more. Work a little bit longer than you might usually do. So just something to keep in mind here, especially this week with Netflix, Apple, Amazon all reporting earnings. There's going to be, I would expect, some earnings volatility from those names, but there's nothing special about it other than the fact that there's going to be a number that comes out and the action's going to be a little bit faster. But at the end of the day, still need to execute as best as I can and, focus on executing, not focus on changing anything in my strategy, because I think that when I execute my strategy well, I do pretty good. All right, guys, thanks for joining me on your weekend to go over this stuff with me. Had fun. Enjoy the rest of your weekend, and we'll have a webinar at some point this week, and as well with the after hours earnings reports, we'll have extended reactions to those, live commentary, seeing those in real time. And I will see you guys on Monday. Everybody have a happy Easter for those of you who celebrate tomorrow, and enjoy. Thanks.